Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, can I have a solo 401k if I own multiple businesses? We get this question quite a bit. So this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. So here are some common questions. I own multiple businesses. Can I have a solo 401k for each one? It comes down to common control regulations. So one person owning 100% of two LLCs, how the IRS sees that as one plan. So for example, let's say you are self-employed in two different businesses where it's just you. In other words, none of your businesses employ any non-owner full-time W-2 employees who work 1,000 hours or more. As a result, you could open up one solo 401k plan. That would not be two separate solo 401k plans because you own both businesses. So it's just one plan, and contributions to that solo 401k plan would be based on your aggregate net self-employment income from both businesses. So you cannot double up on contributions, participant loans. You're going to have to file one Form 5500 easy. So you would not open up two separate solo 401k plans because you own both businesses. So it's just one plan. Now, two business partners owning 50% of each owning 50% in separate businesses when separate plans are allowed. So let's say that you own business A and it's just you. And then there's a second business where you own 50% of that business and the other individual who's not related to you. So he or she is now your spouse. As long as that individual is not related to you, then you could open a second solo 401k plan for that second business if it's just you and that other business partner. So now you have two solo 401k plans. And the reason you can do that is because that second business, you're not the sole owner of that second business. The other owner owns 50% of that business and you own the other 50%, and that second business does not employ any non-owner full-time W-2 employees. If that second business did employ full-time W-2 employees, then you would not be able to set up a solo 401k plan for that second business. You could still have a solo 401k plan for your first business as long as your first business is not affiliated with that second business. In other words, your first business does not do work with the second business and vice versa. And we're also going to talk about how to correctly report everything on a Form 5500 easy, which is an informational return that applies to solo 401k plans. Once the market value of the solo 401k plan is greater than $250,000 as of the end of the plan year, or when the plan terminates, you also have to file Form 5500 easily, regardless of the value of the plan. So if it's valued at less than 250,000 and the plan is closing, you still have to file a 5500 easy to formally close the plan with the IRS. Looks like we have a question here. Good morning. I have a full-time W-2 job and run a side business through a single member LLC. The W-2 employer sponsors 401k. I defer 23,000 an employer matching of $11,500. So here we're talking about a full-time employer plan in which you are not an owner in that business. So if you're self-employed on the side, you can still open a solo 401k plan. From a contribution perspective, the employee contributions, which is 23,500 for tax year 2025, for example, that's going to be aggregated between your daytime employer 401k and your solo 401k. So you cannot contribute more than 23,500 as employee contributions if you're making those as employee pre-tax or as employee Roth solo 401k contributions. Now, the employer contribution, also known as a profit sharing contribution, that's not aggregated between your full-time employer plan and your self-employed business. Therefore, even if your daytime employer makes a profit sharing contribution, you're still going to be able to also make an employer profit sharing contribution to your solo 401k plan. Of course, it's going to be based on your earned income from self-employment activity, because contributions to the solo 401k plan have to be based on your net self-employment income. You cannot utilize your daytime employer W-2 wages towards making contributions to your solo 401k and vice versa. So good question. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So the basics. So from a solo 401k eligibility perspective, it's only available when you have no full-time W-2 employees in your business who are not owners or your spouse. So if you employ a W-2 employee who's not your spouse or who's not an owner in that business, and that individual works 1,000 hours or more in your business, then you will not be able to open a solo 401k plan, because a solo 401k is for owner-only businesses. So when determining whether you can have a solo 401k if you own multiple businesses, you got to be aware of the control group regulations. The definition of that is that if businesses may be treated as a single employer under common control. What does that mean? That means that if you own multiple businesses, then you got to determine whether or not you can open a solo 401k plan. Because if any of those businesses that you own employ any W-2 employees who work 1,000 hours or more, you're not going to be able to open a solo 401k plan or the other business where it might just be you. That's part of the control group regulations, and there's a percentage test that you apply to that. So let's say you own business two, and you own 80% or more of business two, and that business employs full-time W-2 employees who are not owners, then you're not going to be able to open a solo 401k plan, even for business one, where it's just you, for example. So here's another example of the 80% test. So some business owners are tempted to create multiple entities to isolate employees and keep one company eligible for a solo 401k. In other words, they try to get creative, and there's nothing wrong with trying to get creative. It's just that it doesn't always work out with solo 401k plans because of the IRS regulations, the control group regulations. So, like, for example, you have ABC Consulting LLC with no employees. So that's your self-employed business where you are the only employee. In other words, it doesn't employ any non-owner full-time W-2 employees who work 1,000 hours or more. And then you also own a second business where you own 80% or more of XYZ Marketing LLC, which does have staff, in other words, W-2 employees who work 1,000 hours or more. So even though ABC, the first company, has no employees and it's just you, the IRS is going to treat both LLCs as one employer. So because your ownership in XYZ Marketing LLC is 80% or more, and that business employs full-time W-2 employees, you would not be able to open a solo 401k plan for ABC Consulting LLC. It's one example of the 80% test. So one plan, if you own multiple, now this is a different example. This is where you own multiple self-employed businesses. So let's say you own LLC 1 and you own LLC 2, or like the first entity could be an LLC, the second business could be a different type of entity, whether it's a sole proprietorship or a partnership. If you own both of those businesses and it's just you, then it would just be one plan. One plan would be sponsored by both businesses. So you would not open up two separate solo 401k plans. You would open up one plan, and then contributions to that plan would be based on your aggregate net self-employment income from both businesses. Therefore, you could not double up on contributions. So the annual contribution limit for tax year 2025 to a solo 401k, for example, is $70,000 for someone who's under age 50. So you would not be able to open up two plans and double up on contributions. It's a total of $70,000 in contributions for the year based on net self-employment income from both businesses. So one plan. You also cannot double up on solo 401k participant loans. It would just be one Form 5500 Easy. Because the 5500 Easy, which is an informational return that reports the total value of the plan as of the end of the year, is used to report the value of the plan. So it's not per employer, it's per plan. So multiple plans possible. Separate solo 401ks are allowed if businesses are not under common control. Example, separate ownership and distinct operations. And I think I gave an example already, but let's say you own business 1 and you're the only owner of that business. And then you own a second business where you own less than 80%, and the other owner is now related to you. And what's more, that second business does not employ any non-owner full-time W-2 employees. So as a result, you could open up two separate solo 401k plans. One for your first business where it's just you, and the second one for the second business where the other owner is not related to you. And that other business doesn't employ any full-time W-2 employees. Maximizing contributions. So employer contributions are based on each business's net income. So using that scenario where you participate in two separate solo 401k plans. However, the employee contributions, the salary deferral, also known as an employee contribution, would be aggregated between both solo 401k plans, but not the employer contribution, also known as the profit sharing contribution. So you could make profit sharing contributions to each plan. So common mistakes to avoid, which we touched on: double counting salary deferrals, ignoring control group and affiliated service group rules, splitting up multiple plans under related entities. Some real life scenarios. Example one same control that equals one solo 401k plan. We gave an example on that earlier. Example two owners, separate businesses, two separate plans. We gave an example on that as well. Compliance and reporting. Make sure you follow IRS aggregation rules for limits and for Form 5500 Easy reporting. Keep clear records for each business contributions, which are tracked by making contributions from the business bank account into the respective solo 401k. And then you report those on your personal and or business tax return. So keep takeaways. Common control equals one plan. That's where you own two businesses and it's just you or your spouse, for example. That's just one plan. Separate ownership, that results in having multiple plans. Plan structure impacts tax savings and compliance. That has to do more with whether you set up a sole proprietorship or an LLC taxes an S corporation, for example. Okay, looks like it's come to the end of our slides here. Go ahead and type over any questions you have if you haven't already. I don't see any questions at the moment. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.